Welcome to Jobs with Joanie. We're so glad you're here. My name is Danielle Bufflin, and I'll be helping behind the scenes. We will be joined by EmployBridge's Chief Workforce Analyst and President of REMX Staffing Division, Joanie Courtney, monthly to become experts on the current job market and workplace trends as she speaks to the talent supply and demand cycles that impact U.S. employers. She is a regular contributor to the Fox Business Network Mornings with Maria show. At this time, I'm going to turn things over to Joanie Courtney. Welcome, Joanie.
Thanks, Danielle, and welcome everyone to the call. Thank you for joining. I'm thrilled to have the opportunity to speak with you today about the latest job report data, which was just released last Friday. So we'll be taking a look at the January jobs report. And good news is it was a very strong report and showed us that we have continued strength in the overall economy. The report actually beat expectations from Wall Street, and we came in with 225,000 new jobs created for the month of January. So it looks like we're starting out 2020 with a bang. If you look at the unemployment numbers, we do have 5.89 million people looking for work, which puts us at about a 3.6% unemployment rate. Now that did tick up slightly from 3.5% in the prior month, but it actually ticked up for a very good reason. We saw that more people are entering back into the workforce. And with that, the labor participation rate went up to 63.4%. So that was a very good indicator. We're seeing that there's a lot of optimism in the workforce. People realize it's a good economy, a good job market. They see wages, which moved up 3.1%, and we're very optimistic about coming back into the workforce. Now, that number, 63.4%, is still a pretty low number, and we'd like to see the U.S. workforce up back to the levels where it was in 2000, above 67%. But we have a long way to go there. Need to get more women back to work, more millennials working, and to try to get that number up and moving in the right direction. So let's take a look at the actual job gains and see which sectors are actually adding the jobs. Construction was one of the strongest sectors for the month of January, adding 44,000 jobs. Unfortunately, we saw that manufacturing continued to be very soft. Manufacturing is one of the sectors we are most concerned about. It has slowed down, certainly in the last year, and some of that may be due to the uncertainty with trade in China. But now that there is a phase one deal on the table, we're hopeful that manufacturing will start to pick up speed and we'll see those jobs come back into that manufacturing sector. We did see that leisure and hospitality performed very well with 36,000 jobs. Healthcare continues to be one of the strongest sectors with over 47,000 jobs created. And then professional and business services had 21,000 jobs. Transportation and warehousing was also very strong, just shy of 30,000. Unfortunately, we did see that the temporary labor sector did lose 1,500 jobs for the month. And this is an indicator that we do watch closely, and we'll be looking to see if we rebound certainly in February. So let's take a little look at the unemployment rates by the different sectors so that you can all see which sectors are having the hardest time finding people. And we can look at this certainly on a comparison of how it was last year. So we know overall that unemployment nationally is at 3.6%. You can certainly find your local state and county unemployment on your local chamber website, so you can dig into that further. But we do see that even though leisure and hospitality is one of the best performing job sectors right now for job growth, they still have an unemployment rate almost at 6%. So there's still some room there, people looking for work. hopefully that will fuel continued growth in adding jobs in that sector. We are seeing that construction is starting to decline a bit. Of course, it's still above the national average. It's at 5.4%, but it is down from 6.4% this time last year. Some of the tightest sectors for unemployment that it's just so difficult to find skilled talent is definitely manufacturing, transportation, and financial activities. Those sectors are at such a low unemployment rate that it's almost to the point where there really is not available talent to do those jobs. So there's definitely some challenges there. Now, to make this even more complex, if you look at having a bachelor's degree, national unemployment in that sector is down to 2%. So the good news is having a college, 4-year degree really does lead to great employment and opportunities and being employed. Now that I've gone through some of the data and insights, I just want to take a couple of minutes to share some of my insights with you and some of the things that we really are looking at EmployBridge, and give you some tips as you're thinking about how do you really hold on to your workforce in this tight labor market? Because it is the tightest labor market that we've probably seen in most of our lifetimes, to be at a 50-year low. And we're also seeing this incredible growth and strong economic environment where we keep adding jobs and the stock market keeps performing well. We've seen that the Q4 2019 GDP came out at 2.1%. So there's continued growth, certainly, in our economy. But we know that the most difficult part of actually growing our economy right now is having the skilled and experienced talent to actually fill the jobs. And that goes for all sectors. It's not just in healthcare or not just in transportation or the professional business service sector. We're seeing it certainly in manufacturing and construction. The jobs are changing. The skills, the experience that people need in today's workforce have changed. And unfortunately, the workforce has not really kept up with the skills and experience and education that they need to have to get those jobs done. So we believe at EmployBridge that every company, every employer, and every individual really needs to take ownership of making sure they are investing in education, in on-the-job training, in learning, and getting exposure to some of the new digital skills that are so important in all sectors. Now, we want to offer some advice to all of our employers in attracting and retaining employees. Because this market is so tight, we do predict that wages are going to continue to rise, and employees will have opportunities to go elsewhere and maybe make more money. So how do you hold on to your staff in this very tight market? Well, number one, you have to stay competitive with pay rates. You need to know what your competitors are paying, what your market is paying, and make sure that you are either at that market rate or above if you can afford to do so. The second thing we want to talk about is culture, and culture really matters. People will stay at a company if they have a good culture, if they work with good people, if they have a good environment. So you have to ask yourself, do you have a company culture that people want to be and stay a part of? And if not, what can you do to change that? You also can leverage flexible staffing models for those hard to fill jobs and high volume positions. If it's difficult to get those positions filled on a permanent basis, contract labor and temporary staffing can be a great alternative. I already mentioned it's time to invest in training and upskilling your workforce. If your company does not have a program that's focused on this initiative, I highly suggest you start to think about one. Apprenticeship programs could also be a great opportunity to groom talent for the future. And there's also a lot of government funding available in all different sectors. So when you think of apprenticeship programs, it's not just the trades that we think of when our, maybe our parents or grandparents were in apprenticeship programs, but there are apprenticeship programs in healthcare, in technology, in all different skill sets. And that's a great way to train people on the job and then hold on to them in the future. And the last thing I'll leave you with that people are always looking for is flexibility. Flexibility is so important with your workforce and thinking about ways to just give them opportunities, whether they need to run to a doctor's visit or they have a sick child, or maybe they need a flex day to work from home. If you have the opportunity to offer flexibility to your workforce, it shows in the data that will help you with retaining your employees and holding on to them. So I hope this webinar was helpful to give you that quick pulse on what's happening with the job market. Overall, the economy is very strong. And again, there are more open jobs than there are available workers. So it's a great time to be employed and certainly a great time to make a difference in the workforce in the United States. Thank you so much for listening today, and I look forward to talking with you next month.